Good morning, everyone. I hope that you've had a fruitful trading week so far, whether it be monetarily or financially, or even building your emotional stamina as a trader, right? Practicing risk management, whatever it be that you lack, the area in which you're weak, that's where you should be focused. Some of you are very good, analysts. I've seen you in the groups, but pretty sure that not all of you are making money as yet, which is fine. That's normal. Even to be of someone with the skill that you have is rare, right? To be able to determine turning points of price, that's rare. That's not normal, right? You're within the 0.01 or 0.1% of the world, 0.01, I'd say that, percent of the world. No one knows how to do this. Everyone looks at a chart, they get confused, or they're gambling. Anyways, right? We talked about the price action of Monday already, so now we'll talk about Tuesday. What did we expect? We expect a good amount of volatility to be injected into the marketplace, which is why we have these red folders, right? These red folders mark reversal points in price. Whenever there is either intermarket or sequential SMT. You understand? So the news events, right, which is time, it must meet with price. And what is that? You already know what it is, a Krepken correlation. That's what it is. What did we expect? Well, we expected either a particular high in regards to the dollar index to be rated or a particular low to be rated. And once we have what we should be looking for, which is a Krepken correlation, we should expect a reversal. So we talk about what we expected for yesterday, the day before. So we will talk about yesterday now until the news event is released or the volatility is injected into the marketplace, because they already know which way they're going to put the market, right? Here on my screen, you already know what it is. You already know what this is, right? This is the index futures chart. If you ever hear anyone talk about interest rate, I think it's just my, twist on it or something, right? Because ICT talks about SMT, just doesn't go in depth, and the way he talks about it is just makes your head hurt and makes you want to sleep. So, anyways, here, right, this is the S&P 500, this is the NASDAQ 100, S&P 500, NASDAQ 100, and the E-mini down, right? All futures contracts, right? Yesterday, not yesterday, the day before yesterday, when we did our analysis, right, our focus was where? It was on the S&P 500. Here is where we had our focus, right? While we were, doing our analysis, none of this had happened yet, right? So literally, if I could use this, borrow this, I believe we were around, I don't think we ran this low as yet. So it was literally the 2-week open. So we were around here, right? I just used the replay option to show you where we were. We acknowledged that, and the reason why I did the stream at Monday, Literally Monday, 6 p.m. What is that? That, my friends, well, you should know what that is already. What is it? What is it? It's the True Week Open. That's what it is. And that's why I went, live Mondays, 6 p.m. It's not random, right? We had, this is literally how the chart looked. Buy side liquidity here, sell side liquidity here. We acknowledged, right, that we had this area right here, which is shaded in red. It's a daily fair value gap. For the 1 hour time frame, that's what you need. A daily fair value gap for high probability setups, right? So we had the true open here. We had a daily fair value gap here. And up here we had external liquidity, right? So, right, whenever we are in consolidation like this is why I said that the best asset to focus on, right, out of the triads is the one that is mostly consolidated. That one will determine the turning price of, the rest of them. Price will adhere to this one whenever it breaks out, whenever it reverses. So we had sell side liquidity here and a higher time frame fair value gap. This is the 1 hour time frame. You need a daily fair value gap. What happened then? We had price fall below the true week open. All right, take the liquidity here. Fill the daily fair value gap. Rally. And note that right here, now we would be using this high, right, for the range high and this low for the lower range. Here, what is this? This is a precision swing point. So more times than not, and let me mark this out. These candles so you can see them. So precision swing points can also be used for continuation, purposes. It's not just to get in at the high or the low of the day, right? And here, the Dow, we had this. I remember, were we bearish? Was I ever bearish? Like for the past, 2 weeks or so, I have not been bearish. It's literally just been, if you go back, all the videos last week is, we expect higher prices. We need price to go higher. That's what it was. We expect higher prices, and we expected price to go higher. We were not bearish, and we are not bearish, right? On the higher time frame, we expect at least all-time highs to be taken. Nasdaq, right? And when that happens, then we compare and contrast each asset with one another in regards to the interest rate triad and the FX triad and the index futures triad. So anyways, this candle right here, right, that's a precision swing point. This one right here, same thing, and this one right here, same thing. Now, high to low. This precision swing point formed where? Above the 50% of the range. We will use this one right here, right? due to the fact that it caused a SMT shift, right? So here, looking at the E-mini NASDAQ, we can see the price broke above this high, right? After creating this run of liquidity here. So why would you expect this to fall? Why would you expect this to collapse? Why would you expect this to keep going lower? Remember what I said about the S&P 500 or the asset, which was in tight consolidation. It will determine the direction of price. So anything that's happening here is due to the fact that this happened. Also, looking at this going to daily, there was no higher time frame period here, but here in the S&P 500 there was. So it's not that you're just looking at one asset. Remember, we're comparing asset classes. So if in the S&P 500 we have a daily fair value gap here, we can literally cut through time, cut through price, cut through. It's like we have, I don't know how to explain, we have different dimensions, right? And they affect each other, right? It's like each of these assets, they're their own room. If you knock on this one, you can hear it here. Basically, say I live here, but if something happens here, it's going to affect what happens here. So this gap right here, and I'll try to say, for example, this is the gap, right? It's going to be hard to do this because it's not, something that people do. Do you understand where I'm going with this, right? So it would, be something like this, right? This gap cuts all the way through this one, right? And it continues and continues and continues. So even though there is no gap here in the, like visually speaking, in the NASDAQ, there is no gap here, right? Due to the fact that there is a gap in the S&P 500, we can take that information and use it here. And this is why intermarket analysis is important, right? This is why it's important. A normal, regular person, they would see this as, choppy price action. What is this? Or they would assume that this reversal is due to the fact that, I don't know, this down close candle is quote unquote a order block, which isn't true. It's not. It's actually more than that, right? Which I'll show you. You already know what it is. I'm pretty sure that you already know what it is, right? This is a precision swing point, right? And remember what we said when we, talked about precision swing points a while ago. The wicks, right, the top, right here. This would give you that reaction of, what you would like to see a fair value gap do. Not a fair value gap, yeah, and a order block. So this candle right here, right, is what? It's a precision swing point, and also, if you look, you compare them. Let me turn this on right here. I'll make this one bright. So we had price here. Now we're looking at the S&P 500 trade into this wick. And it's not just any wick. It's a precision swing point. That's what it is. Right? That's what it is. And if you go here, right, you can see price trading through this wick, then through the lower half, right, or the lower wick, right? So this is the top, this is the lower, right? This would play as a, this would be a gap, right? Talking about, remember wicks are gaps. So this small, movement of price, closure, separates this from here, which is also another form of divergence, right? So it could happen, even if we had, for example, well, it did happen. I was trying to find an example that did happen here, right? So we have this wick traded into this one, right? Price didn't go through this wick. Here, right? This candle right here is not a precision swing point, but the wicks or the gaps, because wicks or gaps are separated by this small body. And it's like, we're not going to go too deep into this. I don't want anyone confused. But you can't go wrong with it, right? But, don't say that, Dave. You can't go wrong, but, right? It helps. It just helps. Right? So here, what do you see? You can see that, right? The top, the higher, the premium wick of the candle. And remember, right, this needs to be higher time frame, right? This needs to be higher time frame. It can't just, you can't just be looking at one time frame, the 1 hour time frame, and you're just trading that. You see a premium wick in a 1 hour time frame, you're going to buy. No. You need to see and everything line up. You need to have a news event. You need to have at least one of the assets, and this is just for high probability, you don't really need it, but having a higher time frame for value gap. Gaps are important, right? And yes, wicks are gaps, right? So here, right, we have price trading down into, right, remember, this candle right here is the same time as this one. This is not a precision swing point, but you can use the gaps or the wicks, which are gaps, in a similar way of how you use premium discount up or down, sir. I already told you that I'm not bearish. What else do you want? There it is. You want to go and you're going to wait for confirmation, wait for price to either pull back, form SMT, or you're just going to randomly buy and then get liquidated, and then you're going to, annoying. Very stupid thinking, right? Up or down? Do we go up or do we go down? They want to learn how to read price. They want to learn the mysteries, the interesting things about price that you don't know. Or do you want to be, or do you want a signal service? Well, is that what you want? Up or down? I already told you. If you're not if you don't know, I already told you what I expect. I already told you what I expect for these three assets that we're looking at right now. I already said that like 10 minutes ago. I already said that. When will price turn? What will happen? When will price turn around? Whenever you see what we expect, what we like to see, what we should see line up. When there is sequential SMT, if you can't wait, then you shouldn't be here. You should quit and leave the group, then just continue doing your job, because you're not going to, find success in any way. Anyways, right, this right here is very important, and this right here it's not just one candle that we're looking at. Remember, right, this right now is the day that we give sauce, and this is sauce. And people will understand this if they don't pay attention. So you should be paying attention. Okay. Here, and I gotta clear everything for this. Like, what's the main reason? Oh, we were in premium, you were still expecting higher prices, and we just kept going higher. Why? Okay, we're gonna talk about that. Here, right? This candle, focus on it. I wanna. Oh, okay. We're gonna have CPI very soon. And most importantly, you shouldn't be even trading CPI. You should either be in in the trade before, take some profit holding something, or you wait until after to enter the market. That's literally how you should be doing it. You shouldn't be, okay, I'm just going to buy now, expect CPI. No. So anyways, here, look, this is the daily time frame. This is a precision swing point, right? You can see that. Here, on this side, we have the premium wick. While here, we have the discount wick of the candle, which is separated by this small body. This is the exact thing that you want to see, right? This is the exact thing that you want to see in price, right? And remember, what did we expect? Higher prices. Anyways, that alone would be, you know, a good amount of, what would we call it again? Volatility, right? But, you know, personally, if I was, you know, which I am holding here, my TP is already hit right here already. So anyways, right, don't get too excited and hope no one actually went in, bought that, and then trying to, you know, contribute that profit to me. And remember, this is a daily candle. This is a daily candle, by the way. Yeah, that's what this is the 1 hour candle. So that's a lot, right? But let's go back. Right. Just relax, breathe. It's okay. It'll happen again. Don't, you know, we're trying to get to the reason, you know, what caused price to do this? Why did we expect price to do this? This is, you know, we're going to talk about why we expected this just now, right? This is why. And it's not just, as we've seen in the, you know, the past live streams, right? And whereas we've been on point, and, you know, which we are right now, which we have been right now. Why? Like, what's the reason? How did you want to know how I knew? That's what you want to know. And this is what it is, right? So we have a premium wick here. So this right here, we are focusing on this candle and this one. Out of the assets, like the 3 assets, in regards to your triad, right? One should have a fair value gap. And blinked and TP hit so fast. Just relax, bro. Don't, you know, just calm. Take a deep breath. It's just one trade. It'll happen again. And again. And again. And again. Right? So here, right? We have the premium wick overlapping with the fair value gap. Right? Price reacted to this. This is precision. I don't think you understand. This is precision. Right here. This is precision. Right? So we have this daily gap, right, overlapping with this premium wick. After the premium wick, we should have a swing point, right? So this right here is a precision swing point, right? And in the broader, you know, sense of things, if we look to the right, what is this? Higher candle. To the left is a higher candle. To the right, there's a higher candle. What is this telling us? Right? And then where is this being formed? In this gap right here. Now, you can see why we were focused on the S&P 500. Here in the Nasdaq, and I'm trying to explain this to you why, because it's important. It's, you know, this is where, you know, we are stepping out of the, you know, elementary stuff. This is where you have things that, you know, are not in books. No one knows this, and it works. It's not just, oh, he just talks about it in hindsight, right? And the reason why it's sometimes, I don't go on Twitter or I don't go on the internet and I'm like beating my chest. Why? Because it's normal. You can do it too. It's not that hard, right? Right, and that's why before the live stream started, all I said was what? Okay, we're just gonna expect price to keep going higher. I don't want to, pour myself out to be, cocky, whereas I'm like, okay, price gonna go up. No, I'm the best. I'm this. I'm that. No, 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 no. It's just expecting what's logical to happen. And why should this be happening? Why? Because price is an algorithm. It's doing what it's supposed to be doing. And that's the reason why. On the screen right now, you can see a very, this is, how you can actually know which day and where the daily candle will go. Right? That is it. So on this candle right here, look at the NASDAQ, right? This candle. And then on this candle right here, look at the S&P 500. Right? All of this happened just for this uptrend right here. So we had to have price do this, right? There's a cracking correlation between this candle right here and this candle right here. In the Dow, right, you can see this candle right here. This is also a precision swing point. But what happened? Price did not even go close to it. Price did not even go close to it. Here, what is this? This is another PSP. Precision swing point. Right? So we have one here, which would be the base of the liquidity run. Then below this, what do we have? A fair value gap here. We did not expect price to go lower. And why did the Dow, get injected with the least amount of liquidity? Due to the fact that we have this right here, right? Price did not return to this candle. So you see, without the understanding of precision swing points, you will not know what this is. It will just be like another candle. You will be like, what is this? It's not an order block. Like, how could you be buying into a close candle? Like, why would you be doing that? It's not an order block. Yeah, they don't understand. They can't understand. They can't understand. It's amazing. I love it. Right? It's like you have to be studying. You have to be looking at these things. You have to be seeing it work. You have to be knowing where it works. Right? I've already given you a lot here, and it's not just just talking about previous price action, right? That's not what it is. That is, yeah. So this right here, very important, right? 1, 2, 3 candles, right? It's a 3 candles pattern, right? 1, 2, 3 in the center, precision swing point. The candle to the left of the precision swing point is important. The candle to the left should be symmetrical, right? So this should be up close and this should be up close. When that happens, what do? You take the wicks, boom. Premium wick, boom. Discount wick. S&P 500 trades into the premium wick. Dow trades into the discount wick. Cracking correlation right there. Higher prices. Do you understand? Pretty sure that you don't understand. If there's any doubts that you have, like, or, something that you miss, something that's making your head hurt, something that's good, right? Just as how, when you exercise the body, it hurts. When you exercise the mind, it will hurt as well, right? That's okay. That's normal. That is fine. Why is this candle a precision swing point? Due to the fact that this is a down close candle and this is an up close candle. 101, and this is why when I talked about the precision swing point like 2 months ago, what did I say? I said it's elementary. It's just the base of what is to come. That's what I said. So if someone just has a precision swing point out there, they don't know how to use it. They think that's just precision swing point. Sure. No. Precision swing point just fall in the fair value and then I just buy that's it. No. That's not all that there is. Also, in this day right here, it's Tuesday, yesterday, we expected what? Higher prices. Price ran this low. And that's fall back in the time frame that we're looking at. I even went off topic a bit, right? We were talking about this precision swing point here, and I went talking about something else. So yes, here, right, you can see the precision that the premium wick on the daily time frame gave here, right? After falling into this daily fair value gap. So we have the daily premium wick overlapping with what? The daily fair value gap. Listen, no one will know how to use this. Why? Because you need a precision swing point, and then you need the previous candle before the precision swing point, which is to the left, not right, to the left, to be in symmetry, right? That's what you need. No one will understand. No one will know what that is. Post this video now, they'll watch it like, what the hell is this? And that's how it should be. It shouldn't be common knowledge to everyone else. They should have to, if someone want to talk to you, they gotta, pay you, It's not, for you to explain to them day after day after day. And I talk about you, not me. In the future, if that's something. And then here, right, the 15-minute time frame. Right, and we'll look at the daily quarters. What did we expect? Higher prices. We expected S&P 500 to go higher and the NASDAQ to go higher here on the news release, right? What did we have here? Oh my god, no dates. Doesn't work. I told you. How many times? A lot. Whenever price cracks, right, it turns. So here, what did we have? S&P at the S&P taking this low, the low of what? The London session when? During the New York session. What happened here? The NASDAQ failed to do so. What happened here? The Dow took the low. What is that? Sequential SMT. I hope that you found value in this. Right. I don't think that I have to talk about the Forex market right now. Right. Everything applies there as well. And I've been here for a while, right? Here, Well, I'll just do it. Then, right? So we got this here, right? Remember what we said about this gap? Do you remember? What did we expect? We didn't expect this gap to be filled. We explained why. If you don't understand why, and this is another concept that was new as well, you need to go back and watch it, right? Because here, what did we have? We had SMT. Here, what did we have? SMT. We had the Dow, not the Dow, we had the dollar index. Take this high. Euro failed to do so. Was this sequential SMT? No, this was not sequential SMT when price ran this specific high, which I'm going to highlight with red right now, right? This was not sequential SMT, but this one was where we had price push above this high, which was Monday's high, right? Here, it didn't happen, didn't push below Monday's low. So remember, whenever we can have SMT be confirmed by a lower time frame sequential SMT. Do you understand? And in regards to the lower time frame, the easy way for you to measure that would just be, the SMT, which forms over a lower number of candles or a smaller range of candles, right? So higher time frame would probably be 1, 2, 3, 4, 5, 6, 7, 8, 9, whatever. And then you have a lower time frame SMT formed over a lower amount of candles than that. Obviously, right, here, we had what? We had SMT, right? Here, there's no closure. When there's intermarket sequential SMT, you do not need a closure, and there is intermarket sequential SMT, which you will find if you look. Right? You will find that if you look. You will find it. Also, here, right, we have this gap right here. Do you see it overlapping with this liquidity void, right? So here, we have this. What is this, right? And this is the last thing I should give for this week, to be honest. So this gap right here, it's not just that it is a, what do I call it is it a vacuum block or something like that? I don't even know. Okay, so this would be a vacuum block, right? Where you see, which is not really important, right? Just know that whenever you see a price like this, right, it's not a fair value gap, but it is a gap, right? Now, let's look at okay, there. When you have this gap right here being a either new day opening gap or a new week opening gap, then, right, you will have that gap rejecting price whenever there is SMT. Also, right, when you have instances such as this, right, you do not need a closure because price will react very quickly, right? You don't need a closure. Here, right, we have this high, which is above the new week opening gap. There are times, or most times, you'll see things like this happen, right? The high, which is a new week opening gap, is wicked above, then price rejects. Remember on, was it Tuesday or Monday? Monday, right? We talked about this high, right? And this low. We expected that if price ran this high, it's going to just fall below this low right here. What happened? That's what happened. Rewatch the video. When do we expect lower prices for the dollar? We expect higher prices for the S&P 500, the NASDAQ, and so on. When we expect higher prices for the NASDAQ and the S&P 500, we expect the opposite to happen for the dollar. When we expect the NASDAQ and the S&P 500 to go higher, we expect the same thing to happen for the euro and the British pound. Is that always the case? No, it's not always the case. When it's not always the case like that, right? Whenever we have the S&P 500 opposing the euro or the Great British Pound or so on, then those conditions are low probability, and we don't want to be participating in those conditions. We want to be participating when the market is symmetrical. Now, dollar falling, yes, NASDAQ, Dow, higher. Dollar falling, euro, British pound, higher. Euro, British pound, higher. ES, NASDAQ, Dow, higher. Hope that you found, I'm pretty sure that you found something useful in this. And yeah, we will speak again. Well, for sure, you already know Sunday. This one is a long one, 15 minutes, and not 15 minutes, 45, because I started to record it 5 minutes after. Very good. This one was good. I like this one. This one's very good. Hope that you have a wonderful day. We'll talk again. And if someone can come live and tell you the direction of price, at least 50% of the times, which is very bad, to be honest. But yeah, if they can't do that, then they don't know what they're doing. They can show you fake screenshots. They can show you fake account, but do they know where price is gonna go? Mentor, where will price go? We have to wait. I don't know the directions yet. Conditions very bad. Anyways, have a wonderful day, and we will talk again.